Gentlemen, welcome back to the channel. This is the second YouTube clip I'm doing for you guys, and I say gentlemen because I already know that this space is honestly a sausage fest, and I am okay with that. I posted on my Twitter that the second YouTube clip will cover these specific topics, and I had a better idea this afternoon. I already had the market update for my members. These were the topics discussed, and also I added some TradFi sprinkles, which are called the Fed rates and also the US 10-year yields. Basically explaining how the cycle should end and why everyone is looking at 2021 for similarities, but the similarities took us in our journey back to 2017. Enjoy this market update. I hope it gives you more clarity on where we are in this cycle. And if you like this type of content, you already know the subscribe button. And also, I'm not posting this to sell you on anything. This is free to watch, and if you want more free content, in the description you have my totally free newsletter. And always remember this, you should never pay for services unless you became profitable first in the market you're activating in. Do not pay for courses, do not pay for subscriptions, do not pay for mentorships, do not pay for alpha groups, do not pay for anything in your life unless you became profitable in the market you are trying to make money in. So enjoy the market update. Let's dive right into it. We're going to start with the S&P index versus the Fed rates. Then we're going to go through the yields, which are signaling something interesting. Then we will start talking about the altcoin positioning and the final trigger for this cycle end. So first, let's start with the S&P, and we have here the Fed rates. My base case remains that this should not be a fake rally or a dead cat bounce because, I don't know, it seems kind of obvious for everyone, as everyone puts on fractals from 2022 going into the bear market. I do not think this is the year for the bear market, but I do think that this is the year where all the investors and all the traders will be wrecked into something like this. And from an Elliott wave standpoint, we kind of have some clear structure here with the 1, 2, 3, 4, and the fifth is on the way. And my base case remains that this is the one. And then from a second part, this year we will have some weakness on the board. The other case remains something like this, and the end of 2025 maybe I get invalidated and we have something like 2021 going into the cycle reset. Same ish for Bitcoin, but this would mean, in my opinion, that we have rate cuts on the way, along with something like a global event which takes us lower than this low here. And while this second scenario is also on the table, I would like to look at yields because they are spiking back, and for this reason I do not think that the Fed will cut the rates. Based on the 54-year inflation cycle, you can see that rates from the 80s were going down and also yields were going down. Let's put on the monthly chart. You can see this whole trend, which I think that this trend ended with COVID, and what we could have going into the cycle reset is something like this, maybe targeting this trend line, but this also comes with market drops and also comes with rate cuts. Let's take some examples. You can see in 2019, before the COVID crash, you can see this COVID crash also meant a crash in yields, basically meaning that people were buying bonds here. Remember this, when the yields start to go up, the bonds are being sold off. When the yields drop, the bonds are being bought. But now, in my opinion, we started the next cycle of yields also, and rate hikes into 2034. But going on the weekly chart, zooming in this cycle right now, we want to see this lateral movement continue for us to see the rates being paused again and again. Because if we see this starting to drop, then this tells the Fed to cut rates sooner rather than later. So basically everyone panicking right now that these yields started to spike up. We want to see this spike up. We want to see this continue the chop up and down. Do not trigger the Fed to cut rates because we know what we should expect if we see this. It rhymes with cybernetic. This should come with a big narrative because only a global shitstorm could be used as a reason to print more money, in my opinion, than the pandemic. Let's see the last three triggers. When we had rate hikes, then the pause, then rate cuts, the 10-year yields said the same story. The Fed was still hiking in 2018, but then the 10-year yield started the drop, they paused very fast, and they started to cut very fast. Here the yield stabilized for a short period, the Fed paused again, and then the drop starts and problems also. Again, we can see it in 2007, spikes up and down, up and down, up and down, rates going up, being paused right here, and then when yield started breaking down, you can see that rate cuts were on the table, stabilized for a bit right here, stabilized for a bit, paused the rates, global event continuing. Yields crashing down as bonds were bought up. Same-ish before the dot-com bubble. You can see spikes up, stabilized for a bit, started the breakdown, very, very fast rate cuts. You can see they cut very aggressively here, which is not the case for us right now. You can see 3 cuts, then 3 pauses, and the yields are spiking up again. So more pauses are good for us. The exact same thing on the charts. You can see also Bitcoin closed the highest daily candle 2 days ago, if I remember correctly. But this is my trigger for now. That's why I'm very happy with the first scenario, with another pause in June. But let's see what these yields continue to do going into June and maybe July, and also what the market is doing. The higher we go, the lower the probability we do something like this with an event right now in the summer, because this would look a lot like 2021, and I do not think the market is giving the same fractal from the last cycle, because in this case everyone would make money. Just copy paste this, bro, no problem. Copy paste, just short here, and that's not how people make money in the market. The market always gives something different, but keeps the cycle intact. And I was talking about this regarding the Bitcoin halving. In 2020, we had the halving in May. We dropped hard before the halving and up only after the halving. A lot of people told me the same thing would happen back in 2023. We should do something like this into the halving, and then and only then we would be up only for the bull market. And you can see that the market never gives the same thing one cycle later. But anyone who took the time and went in the past and checked the July 2016 halving for Bitcoin, you can see that actually we had the dump after the halving and the pump before the halving. But no one wants to go that far into the past and look for data. They just follow each other blindly, just like sheep. Also last year I was talking about the same thing. We would pump before the halving and we would dump after the halving and then resume up. So for now, for Bitcoin, I'm still placing my bet that this is the next area for Bitcoin and not this one. And maybe in the second half, we have a stronger half than the first. This is still on the table, but for every day that we close green, I do not think this scenario will play out. But I want to be careful here, because this is a structure that it doesn't even give you a clear count. You can take this as a wave 2, maybe a 3 and 4 minor, another one here, but somewhere on this road we should have something like a wave 2, more clear, then continue. I do not know how this would look and from what price, but if this happens, because we will go to the discussion about the altcoins and the Bitcoin dominance, we should be ready if something like this happens and gives a clear 1, 2, 3, 4, and then we'll see the 5. You can see also in the past when we have a similar structure, which is impulsive. Here we have the 1, the 2, 3, 4, 5 extended, and then corrective movements. We will see what the month end is bringing to the table, but I'm guessing this new all-time high maybe invalidates some of the thesis for the bears and catches them off guard here. And if something like this should happen, I guess the shorts will be coming back to the market, because everyone would think that this is just like 2021. I'm already seeing all over Twitter a lot of fractals like this one. Hey man, it's just like 2021. Let's short. This is what's happening next because of reasons. So my guess is there has to be some bait here. Again, I don't know if it starts right now, and maybe we need to go up more. And going into the altcoins positioning, let's first drop the Bitcoin dominance, because let's talk cycles in Bitcoin dominance and let's understand why everybody is so unhappy with this. Because again, they went in the last cycle, and in the last cycle the altcoin season started in January and was ended in May, so something like 5 months. But this actually started happening at the beginning of 2021, a lot sooner than the last cycle. For me, this was the first leg up for altcoins, but again the dominance almost got to the same level. If I put on the Fibonacci, I guess that was the 7 0.786. Let's see, I'm just curious for the moment. Yeah, nice rejection here from the 0.786 Fibonacci area. For me, this was the altcoin season that started in December 2017 and ended a month and a half almost later. So this drop from 71% into the 35% area, this was the altcoin season that started again when 2017 ended. So basically what happened in the next cycle, this happened earlier again to bait the majority of market participants, because I'm guessing that in May or September, judging from the 2017 cycle, basically people were drawing charts like this. Oh, Bitcoin is doomed, bro. We're going into the 20% dominance for Bitcoin. Altcoins will go crazy when 2021 is over, because that's what happened right here. This happens every cycle, but actually this happened already at the beginning of the year. And this was actually the moment for me when I started to go all in into Bitcoin. Best decision of my life. But right now I am not all in into Bitcoin. I am heavily sized in altcoins because I'm waiting for the same thing that people think right now it is not coming, because we already had the start of 2025 and they just look only one cycle in the past instead of looking at this cycle. So the market makers already fooled everyone. And for me to know that this cycle is ended, I want to see the dominance dropping in this area right here from 47%, maybe going down to 42%. We will see how this looks like. Remember that this doesn't last very long, like 1-2 months. This January 2021 drop was actually the start of the altcoin season, maybe something like a wave 1-2, and then a 3, a 4, and a shallow 5, and some corrective movements. But the bigger drop was actually from 61%, and it lasted from March into May, something like 2 months, similar with what we had in 2017. So basically just a small window of opportunity to release your altcoins into a nebula of forgetfulness and just cash out and leave. Because when this happens, not if, when this happens, I would guess that people will start drawing lower targets, the end of Bitcoin as we know it. Maybe the XRP is the new technology for crypto right now, and everyone is again locked in these shitcoins going to the next 4 years. We will see, but this is what I want to see first, no matter when it happens. I do not know if this happens right now, or maybe in September, October, or maybe in December. I just know that I am positioned, and when this starts, we will start exiting positions, and I mean spot positions. And now if we look at all the charts, some of them have better risk reward than others into the half-coin season targets. Maybe some of them have lower risk reward going into a new all-time high. It doesn't matter the chart. You can see also on UNISM protocol, this still has a good price for now. Others are at 4x the cost of acquisition. The CRV chart looks good for now, but we are in a resistance right now. The MACD is over the median line on the daily, and it seems to be coiling up again. Let's see where the price heads, and if it doesn't have any more juice, in my case, I would take another bag of cash off the table right here, just to be protected from the potential downside. Maybe, just maybe, we retest this trend line right here, because again, if Bitcoin does something like this, even something like this, and the dominance is rising again, these charts will give other opportunities. But I guess if you're here right now, you are already positioned, and there's nothing left to do but to wait for the trigger. Because using the same trick on the MACD, on the daily, you can see that the MACD for Bitcoin dominance is mirroring a downtrend, the opposite of what you see on the altcoin charts. This one doing something like this, continues the downtrend, and the dominance continues down. So as a summary for this market update, this is the trigger for the altcoins, and when we start getting out cash heavily, and remember, do not rush the cash back in once you've taken profit off the table. And for the macro picture, this is the other trigger that we want to see continue chopping before it goes down, because if this thing continues to go up, this comes along with massive printing and a massive bond sell-off. But this for me doesn't make any sense right now, because they cannot and will not print a lot of money with this kind of rates right now. So I'm guessing that once the chop is over, and I hope this chop continues as long as it can, because when the drop starts to happen, That's the trigger for Fed wanting to start the rate cuts, and that is also the trigger for this global event that I'm speaking of. And as a protection from this global event, I honestly would not know what to tell you, what to recommend. I got out already some liquid cash, physical cash. I bought a supercar. I have stables. But again, when the time comes and we see the dominance drop, and with this drop we see the altcoins going nuts, I will sell into stable coins, mostly USDC and some USDT, and I would withdraw the majority of the stables into a ledger. That's what I can tell you right now, but we'll see how this develops into the future. Maybe it's a lighter event than I thought. We will see what the problems at the macro scale can be. I'll catch you up in the next one. Cheers. Bye.